get money back? What are they going to do with this happy money?
Wait. Before you even answer that, let's set this up right. Okay, so a lot of people. How do I know this? Because I was a banker for many years. A lot of people allow the government to take too much money out of their paychecks.
Right.
And they're basically funding the government with no interest, and they're using it as a savings account so that when their taxes due, they're going to get a few $1,000s back.
Right.
Do you recommend that strategy?
No, not really. Though the funny thing I read about that was somebody said it's almost not a bad idea anymore because if you put it in the bank, they're going to give you half of 1% anyway. So you're not really losing anything by letting the IRS keep it. It's not like the bank is paying 10% for a CD. But here's the way I heard the analogy, which is the way to think about it. And you think I've got a chapter in here explaining the value of compounding. Here's a great comment I heard from a guy one time. He said that you go out and buy a television for $1,000. You think, okay, that's pretty good. But you know what? You really bought a $20,000 television because if you had invested that money 10 or 15 years from now, that 1,000 will be worth 20,000. So by buying a temporary item that might give you a little pleasure, you've limited your future, because I guarantee you, you want to send your kids to college in 10 years? You think the tuition is high now? What do you think it's going to be in 10 years? You think gas is high now? What you think it's going to be 19 cents in 10 years? So what I tell people is I said, there's more and more companies even abandoning their pensions. So if you don't take charge of your finances, and I used to kid people. I said the less money you have to invest, the riskier investment you have to be willing to make. So if you have $1 to invest, I recommend buying a Mega Millions lotto ticket. That is your best investment because you can't take $2,000, put it in the bank at 1% and think you're going to have that summer home in Florida. It's not going to work. So the reason...
Well, you're right, and this is why we've got now what's suddenly peeking up over the hedges is now you've got an awful lot of private investors. You can get a tremendous amount of hard money out there for 7%. Nobody cares about paying 7% anymore. They don't care because they can make more on their money investing it wherever they need to invest it rather than not even getting it. So the banks aren't even giving it now. Now you've got the private investors going into their own money, going into their own business of lending their money because they put it in the bank. What are they going to get? 1% in the bank?
Yeah, so that's why
they'd rather give hard money away and get 7%.
Yeah. But, if you have a little bit of money, you got to figure out a way to make the highest possible return on it. And I would put my system up against almost anybody for simplicity and high rate of return. And simplicity.
I think what people seem to think, my analogy out there of how people think, is that they seem to think that the stock market is a very hard thing to understand and get into because of all these little symbols and all these little abbreviations of what everything is, which confuses, like you were talking with all these abbreviations, and that confuses them. They don't have no idea what you're talking about, all these SBAs and da-da-da. And so when we make it, I think if the stock market made it a little bit more simple, I think you'd have a lot more people going into it. But people, and it's not that the people are ignorant. It's just that they don't want to. They've got this little bit of money and they're not going to take a risk and they're not going to be stupid, so they'd rather not do that. So how do we make that more simplistic for them? Your book, I guess.
Exactly. That's why I wrote my book, because I said it is complex. Because most people, there's maybe 10,000 different ways to invest. And I used to tell people in my class, I said, you know what? There may be 10,000 ways to invest, but you only need to get good at one of them that works. Yeah. And the beauty of it is once you have one that works and you stick to it and you see that it reduces the worst thing investors, here's the thing that makes investors suffer the worst. They invest emotionally instead of logically. And I'll give you the good analysis. I'm sure we've all watched Star Trek. So I used to tell people there's two basic kinds of investors. There's Dr. McCoy and Mr. Spock. Dr. McCoy would be going, confound it, Jim, the thing's down 50%. Sell it so we're not living out on the street. And Spock would go, Jim, that's not logical. We should be buying more because the price is so low. So the secret of my investing system is that I'm contrary. Just like J. Paul Getty, a great man and a very smart man and a very rich man, said, buy when the news is bad. So basically in my book, what I teach people is I said, here's a great system. What's the best way to invest using it? I say, you be contrary. You look for things that are low, that can have a great chance of going back up. Just like I tell you know, look at my newsletter from 2008, like in March, you'll see General Electric $5, DuPont $7. Check their prices today and see if you would have made some money with my system using my picks. So I start off with that. I said, that's the cardinal rule in my investing book. Look for something at or near its 52-week low. That's a great starting point. And then, you know, almost any online broker, I use TD Ameritrade, they'll give you free research. So I tell people, I said, if you're interested in the stock, go to the research section. I like the Standard & Poor reports, and they tell you all about the stock and the company. You don't have to do the work yourself. The Internet has made everything so easy. And like for those long-term options I was talking about, it's very easy if you want to check on them. You just go to yahoo.com, click on the finance section, put in the symbol you want to look at, and immediately you get the summary page, and then right on the left it says options. You click on that, you'll see all the option prices. You'll see the strike prices.
If they don't understand the symbol, can they just put the name in? And they'll get it?
Yes, it can search.
Okay, good. Okay, just let them know that. So
Okay.
Let's. Yes, come on, Steve. What's up?
I feel like we need to get really practical. So
Okay.
let's play a game. Okay.
Thought we were.
I just did my taxes. Okay,
Yes.
2 weeks ago. I'm gonna pretend.
Okay.
I got back
You can do
$4,200,
Right.
Jeff.
Yes.
I have $4,200, and I had the money transferred to my checking account.
Okay.
So I'm one of the viewers. So instead of running out and buying a 50-inch flat screen TV, which is what most people will do,
yes.
I'm gonna do what Jeff is gonna recommend to me. So I have $4,200 in my checking account right now. Walk me through the process of what would you recommend for me to do.
Okay. First of all, I
Step by
determine
step.
if your risk level is very conservative or you're willing to be a little more, risky, and just by a little bit. So what I would tell you to do is I would pick a very solid company like Alcoa, because